Welcome again to Sustainable Latin America, a podcast that looks at the geopolitics, economics, and business economy of the region. And today we have lots of interesting questions to sort out as we look towards 2026. With us as ever are Alberto, who's looking pretty much at the more political, journalistic side, and Julian, who's looking at more analytical, economic side, and I'll chip in as well and see where we get to. So, going straight at it, I'd like to ask: has anyone got a clear idea the current balance of power between Latin America, the Donald Trump United States, and the Xi Jinping China? Is that going to last in 2026? It's a triangular relationship. Are there going to be big changes? I don't know who wants to start. Alberto, what do you think?
Okay, let's begin with me. Hello to everybody and to all of our audience on Sustainable Latam. Really happy to be here again today. Just quick think of what you're saying. We end the year with the U.S. clearly manifesting in its strategic review that Latin America is going to be a priority. So I can expect 2026 to be probably more active U.S. policy towards Latin America in various elements. It is already acting in terms of military building in the Caribbean, but more of this is also economic intervention, helping Argentina. Also, intervention in elections in one way or another. President Trump has already manifested explicit support to right-wing candidates in some countries in the past elections.
He told the Hondurans who they should vote for, didn't he?
Yeah, exactly. That's one of the elements. But also, it is like establishing a relation with a very like-minded candidates. And we cannot forget that he's already created a club of presidents that are like-minded to him. Milei in Argentina, now Cast has been elected in Chile, which has strong views. Not necessarily that we can say they are blind followers of Trump, but definitely they are more like-minded and more open to have a dialogue with the United States Trump, basically. Even in Bolivia, although the government is more centrist, we are seeing a more friendly approach towards the U.S. And we can see also, I think the U.S. is very clear that they are going to prioritize Latin America. That's one element. There's also, we can expect pressure. We are already seeing this pressure going on Mexico and the trade agreement. But also we see at the beginning of the year the pressure on Panama because of the channel. There is some pressure on Peru because of the ports of Chinese. And I think in terms of trade and military balance, the U.S. are going to put a lot of pressure on Latin America, and probably is going to try to force some countries to choose between both of these. But I don't know, Julian, what is your view in this competition?
Yes, I agree. I think this we're entering. So there are two things. I think the great powers are clearly the NSS, the Trump corollary, and the tension it's putting Latam is going to be really impactful across the regions. Probably more investments across the region from the US. It's all part of the grander strategy for the US in itself, and Latin America and South America are very key in that in the provision of certain of certain things, be it energy, which we can call the Venezuela and so on, but also or Argentina, but also rare earth minerals and whatever can help towards what I would say a grand strategy of being an AI power. As we heard previously, from senior figures, energy is really needed in order for the US to power ahead with its artificial intelligence strategy. The demands from big tech is huge. So in that sense, we can see a lot more intervention across, I would expect, across the continent. That in itself means that money should flow to a lot of the countries in Latin America through investments or presence, and that's a good thing for if you're in the region. The region in itself is probably growing. It's emerging. It's undervalued in the stock market, probably, as my opinion, at least. And there's great potential of an upside here. At the same time, you do have a lot of Chinese investment across the continent, everywhere, be it from Mexico all the way down to Argentina, in infrastructures and key things. And certainly in many of those countries, the main trading partner is not the US, it is China, and has been China for several years now. So,
Julian, can I interrupt you just for a
Yeah.
second? Forgive me. In some ways, we're looking at a potential great year for Donald Trump in Latin America. But my question is, should we also be a bit skeptical? Is the money going to flow? Is real US investment going to go into Latin America? I mean, they've been complaining a lot about what China's been doing, but if you're a Latin American government and you have finance offered on favorable terms, China is looking more generous than the United States. Is that an issue or not?
No, I think I think we know that we see the direction. Argentina is an example where the US actually literally say, let's support and the Trump administration, let's support Argentina, and it's likely that we'll see elsewhere. I can't see any evidence of it right now in Bolivia, but following the change of government, but I expect that possibly there are some deals that are being made there, more favorable terms here. So I think we're going to see a lot more flavor and real investments. They are on the grounds. We hear noises of potential investment from the US in certain countries in key assets. So that's one thing. On the China thing, China remains the biggest partner, and if you think about what China needs and what the US needs, I think there's a really interesting deal here. The US doesn't need more food, for instance. It has plenty of supplies in its own shores. But it does need energy, and it does need to recapture critical earth minerals and so on. So that's their main. I would imagine that's really something that they are after. China in itself, energy is too far from South America, but it does need a constant supply of food for its industries, and also energy and so on. So this is where you probably no energy, rare earth and critical minerals. So this is where you probably will have competition. A competition for the local people is good, because it means it's like an auction. Someone will have to bid higher here and there. That means more capital flowing into the continent, into the subcontinent. So that's the really interesting part. And the other thing which I want to mention is that we do forget that there is a third power, which is the European Union, and there is an agreement on the table, the Mercosur, which could open up huge opportunities, trade between this, that third great power and or lesser power and the subcontinent. So there's a careful play by, I would imagine, by Latin American to be able to manage the three different interests about what they can bring out, but it's not to be completely undermined. And of course, we can talk more about Mercosur, because there's many things going on at the moment.
Could I ask Alberto a question? I'm still in my self-appointed role as being rather pessimistic. for things to make a difference, we've already spoken in previous podcasts. Voters are worried about the economy, they're worried about crime, and they're worried about corruption. Looking at the economy side of it, 2026, this new year, does not look that spectacular. I've pulled out ECLAC, the Latin American Commission for the UN Commission for Latin America. I've looked at their forecasts, and for the region as a whole, you're talking about 2 to 3% growth in 2025 and 2 to 3% growth in 2026. Really, the only country that stands out, which I noticed you mentioned, Julian, is Argentina, which is predicted to have 5% growth this year and 4% next year. So, sorry, that was a very long introduction. But Alberto, is there a danger that slow economic growth will maintain Latin America in a sort of loop of frustration and depression?
I think we have to look this in a context. If we compare the projections of growth in Latin America in general compared to the other emerging markets, it's going to be the lowest growth across all emerging markets. However, it is the highest growth in a decade compared to the average of the last decade. The Latin America, it has better perspective. If I'm not wrong, Julian, you can correct me on that, but the average has been around 1.5% in the last decade. And we're talking now around 2.4, 3% for this year. So we are seeing in this perspective, actually, we can see that the situation is looking better in that area, although it's moderate. It's not in compared like other emerging markets, but definitely we can see that it's a better outlook than the last decade. It's going to last? This is the big question. It depends, I think, in a lot of factors. You have mentioned a couple of that are really important in those elements. So far, and we discussed this, there is a trend in the region to go to a more market-friendly government, conservatives, regardless if they are more to the right or more to the center right, but they are market-friendly. There is a change in that element. However, these concerns about corruption and corruption, also violent crime, insecurity, all these kind of elements are real concerns of Latin American population. And one thing that has shown me in Latin America in the last years is that the people are really impatient with the lack of results sometimes. And this impatience can affect any government, incumbent government. What we are seeing probably is the defeat of the current governments in power and looking for those who were in the position. But it's not the first time this is happening. But we are seeing different, probably, and that's a particularly in the political analysis, is that there is an external factor that could benefit all these more market-friendly countries in order to sort it out, the certain problems, and provide some short-term solutions to the population. Yeah. Definitely, an increase in growth is going to be helpful around that. There are some countries like Bolivia or even in Argentina, whatever we are saying, but the population in a way are a little bit resigned, I would say, probably the word of expect strong economic measures in order to recover. It's like an acceptance that something has to be done in that term, and some pain has to come through the time. But how long this patience is going to take, it's going to be also related with the level of deliverance of the governments.
But there's a trend that you mentioned 3% and so on. I mean, the Industrial Revolution was done on 1.5%. So the 3% is actually a pretty good thing. I think my from afar my take on many things is that right now many countries are suffering from PTSD from COVID, and so you have a dislocation between the actual economic performance, which has been, of some countries, versus the anger and or the need for changes simply because people just need changes or don't change or whatever. And we can see it. We discussed briefly Chile in the past. Now we have a change of government with a different approach. And was it based on the economics? I don't think it was based on the economics so much here. There is a perception, but is it real? Is it not? 3% is pretty good across many countries, and going forward next year is still pretty good. And especially if, as I mentioned before, if we see more investments or more interest in the continent with rising prices and more trade to be done and so on. So I think there's a real opportunity for LATAM in general to really power ahead and on the economic front be in a much better position. One of the other things we talked about was corruption. Corruption is rife in countries. One of the things that we studied with Alberto once was about the linkage between fiscal deficit of governments and corruption. The higher the fiscal deficit, the higher the corruption. And if the economy is going stronger by and large, and there's more tax receipts or whatever form of money going to the government, corruption, we could imagine, goes down by itself because things are just getting better. People will be more focused on making money then there'll be more money for by and large in general. So that's the way that I would see the opportunities here.
I should mention as well that just before starting the podcast, we were talking about the pattern of elections, and just to mention that we've just had the Chilean election, but coming up we'll have elections in Peru in April. Before that, elections in Costa Rica in February. Elections in Colombia in May, and then in October we'll have elections in Brazil. So those are some, in that group there are some really, really important countries. Brazil has got, in fact, the largest GDP in Latin America. Colombia is a very important and economically influential country. So to some extent, I suppose I'm throwing this out as a question. It will depend on individual decisions by new governments in those countries. Do you see them all having the same degree of success or failure, or do you see some cases being easier than others?
We have discussing recently the blue tide in our last episode, but this blue tide is continuing. We are seeing polls, trends, and a little bit the sentiment in general. Peru, it's very likely that according to several analyses that I have read, including the Economics Intelligence Unit, American Quarterly, and a lot of analysis going around that, but saying it's very likely that in Peru, a right-wing candidate is going to win. What we can expect anyway in Peru is also surprises. The big risks in Peru actually, I think, is the fragmentation of the political establishment.
I think there are 37 precandidatos
exactly
for the Peruvian presidency.
And that implies a lot of challenges. But the major risk on this is that you can see probably a populist government, a populist candidate gaining power surprisingly somewhere. So that's a risk. But what we're seeing in terms of the trends and the main concerns of the Peruvian society around that is crime, corruption, and all the elements, is probably a right-wing candidate has more chances to win rather than a left trend, but still is a big incognito. In the case of Costa Rica, that is coming in February, it is expected that the right-wing candidate is going to win. In Colombia, definitely the government of Gustavo Petro, which is progressive left, is in trouble. It's not very popular, and it is expected that a right-wing candidate can win. We still have to see how it's going to develop in terms of candidate around that. But the common expectation is that we're going to see a more pro-market and right candidate, right government in Colombia, probably in second round as well. Brazil is the big incognito. We know that it's too far away as well. We know that Lula is going to compete. He is popular at this moment, going around that, but we have to see what is going to happen on the right. The right is still divided, but it's beginning to consolidate towards Bolsonaro Jr.
Yes.
That's what we were saying.
I was going to say that Brazil will still be a battle between Lula and a Bolsonaro.
Exactly.
Not necessarily the one we know.
Exactly. And this polarization is going to go. I think, and I will be a little bit controversial, but I think of all these elections that are coming, probably the one that the US are going to pay more attention is Brazil, for what is going to happen and what Brazil represents, not only in terms of it's the biggest country in the region, but also what it has. Of all the countries in Latin America, Brazil has a huge reserve, not only in terms of oil and gas and infrastructure, but also in terms of critical minerals that are unexploited. It's not exposed to the US as Mexico or even Argentina is, so it has more independence. But the policy that Brazil has been following in the last year, at least from what I say, is try to keep some, obviously, negotiation power with the US, but not confront necessarily the US, but to stop there. But it's not a position that is, I'm going to align with China. Actually, it's looking more independent and trying to, in economic terms and trade terms, to have other partners rather than China and the US. It's looking for India and other emerging regions, and trying to become more independent in that. And probably that is going to be the Brazil. But I think the US, in a way, is going to try to find some kind of commitment or arrangement with Brazil as well, because they do, in a way, will need to sit down and find some kind of common approach.
Is it possible that that Brazil has a wonderful opportunity, which it is about to lose, which is to finalize that Mercosur European Union free trade agreement? It just seems that, to me anyway, it seems that it's got long-term benefits, phased reduction of tariffs, and it could be a real cause of growth in Latin America. But if the French don't like it, and the Italians don't like it, and the Brazilians don't do enough to push it through, it'll go down in history as 25 years of negotiations which got precisely nowhere.
Yes, I mean, any trade agreement. So just to come back, what trade agreements do is generally reduces friction, and reducing friction just helps the economics for both parties. And so it would be a tremendous shame that this doesn't go through, or from the Latin American perspective, because it would open up more opportunities. So we talked about the US opportunity, the Chinese opportunity, but opening up the EU market, which remains the second or third, the second or third economic power, would be extremely beneficial for the country, for the Mercosur countries. And to some extent, it makes sense for the EU to have access to these key countries. There are concerns, of course, from the French side on the agriculture and competition we will get from this and so on. And these are, to some extent, valid concerns. But at the same time, we are at the stage where deal needs to go through somehow, and I do hope that something can happen. When we published, we did a study many years ago with Berto and the London School of Economics, where we interviewed commissioners who were part of the trade agreement, and we talked about and people in Brazil, some senior not political, but business figures in Brazil, and clearly there was lots of hope that this would go through, at least from the Brazilian side. And I would say that for France and Italy, there is a geopolitical consideration there, and they will need to weigh the benefits and at this given stage, when they are at backwards, they have they're against the wall, whether it's from the US side or from China or from all the others. I would say that not common sense, but the logical solution, it would be to strike a deal there.
Yeah, I'm a little bit with Julian in that it would be a shame if the EU-Mercosur agreement don't end in good port. But there are risks, as you mentioned. The position of France and Italy probably is creating some kind of concern around that. We will see what is going to happen. There are a lot of geopolitical implications as well in all of this. I don't think many of the European of France and Latin, the agriculture concerns probably are right, but Europe really is in some ways trying to find some kind of solution. The problem in that area is also a little bit too political in the case of Europe, because the agriculture sector is a powerful lobby. And in the case of France, for example, not listening to them means that bring power to the extreme right in France, and that's a little bit the concern. But on the other side, I think Europe has a lot to lose if this doesn't go as Julian mentioned. You're talking Mercosur is not a small region. It is 200 million potential consumer for a lot of products for Europe. I remember when we do this study that we did years ago with Julian about the agreement. It's a little bit, as popular saying, trade cards for cows, basically, and still this element is going around. On the other side, as I say, if the agreement doesn't go through and it fails, we have to see what is going to happen. Probably Europe is going to lose complete influence in a very important zone in the region in the world, and we want to see this competition of US and China probably getting harder in the region, is strategically talking Latin America.
Yeah,
also,
absolutely. What it does, it's quite significant, because what it does to the countries that are part of Mercosur, it provides choices. So if you don't have choices, then a superpower can really impact you in many ways. But for a country like Brazil, for its independence, I think a deal with Mercosur would greatly enhance it and position it in a very strong position. And we have to remember that, and just as an example, this is anecdotal, but when Brazil decided to shut down X, Twitter or X, it did for a while before it allowed it again. And then X decided, basically, submitted to whatever the Brazilian government wanted at the time to be able to operate in the place. And that's the type of strength and the independence that a country like Brazil can have, especially when a lot of investment comes from different sources. And and having the Mercosur deal provides that type of independence, that if you want to resist outside powers, that's certainly gives an option.
Could I ask you both a completely unfair question? Is there likely to be a global financial crash, hypothetically? And if so, is Latin America resilient enough to manage its way through? I'm saying this because it's been a while since the last financial crisis.
I will give this question to Julian, who is better analyst than me in the economic terms.
I lived. I was at a rating agency in the last great financial crash, covering banks. So I have some, I still have PTSD because of that. No, it's a really important question, and certainly there are huge concerns about, in my opinion, again, about the amount of debt in Western countries, not just Europe, which is often pointed out, but the US. The US has a debt issue, which has been recognized to some extent by the administration. There have been lots of talks about them doing something about it, and there's some famous crashes. But that is a concern. There's a concern about the valuation of the stock market in the US being extremely high, and that's something, and that many things could derail it. Often in financial crashes, something happens somewhere, and we don't know yet where, and then it extends throughout the economies. So yes, there could be something happening next year. It could bring down a lot of pain, across the markets. But for what I would say is that for many South American or Latin American countries, there's you start from a very low base. The pain has been taken, quite badly across many countries to this stage. And that is reflected in parts. You can see it on some of the stock market indexes versus the valuation versus what we see in the US or even other parts. And one of them, for instance, Brazil, is very much at its lowest relative to say the US. I mean, if I was again a betting person, I would be very interested to look at some Brazilian assets, but at the same stage, Argentina is on its way up as well. And again, to some extent, if you have the Mercosur agreement and you have China needs you to some extent, that helps to kind of balance whatever impact there could be from the US. China is also in an interesting position. China is also in the stock market wise is really low, is on par with Brazil versus the US, and they've had a tremendous hit in the economy, 30% more crashes in their real estate in many areas. And so maybe there is a rebound in China in that sense, because they've taken a lot of pain up until today. And even though the economy is still unstable, if China goes well, LATAM will go well too. And so even if there's a crash in the US, they will rebalance things. It's all relative, relativist perspective. Europe is not, hasn't been doing so well so far, but Germany announced a 1 trillion investment increase, across defense and whatever sectors. 1 trillion doesn't go unnoticed somehow. So we can expect over the next couple of years actually that this money will flow across the economies, and so And so again, that will provide some balancing. Of course, there's the can never there's lots of black swans out there that could happen at any stage. But if we think of Cold War situation, where usually this you basically have pockets that start exploding across the world, where you have clashes between the powers. Maybe that's still the same, but is it enough to create financial crisis? I'm not sure, but all in all, I'm still pretty positive. If in terms of LATAM.
Yep. We're running out of time for this podcast, but perhaps I can suggest we try and round off by just one or two sentences summarizing where we've got to, and I'll start. I've been playing the pessimist, but I'm coming away listening to what Alberto and Julian have been saying, thinking that there is scope for an insightful group of Latin American leaders to manage the risks, reduce the risks, and actually come out with a reasonable growth and presumably reasonable public support through the opinion polls. So I'm perhaps not as dark as I usually am on this. I don't know, Alberto. What are your feelings?
I'm by nature. I always try to be an optimist. I will say, even in the worst scenarios. But I will say, when we're talking about Latin America, in the way that I say, I see 2026 is a year of opportunity, and probably the next years. Opportunities with risks, yes, can be the right, but these are years of opportunities for the region. There is a context of Cold War competition between big powers going around that, but I'm seeing that actually a line of opportunity for Latin American governments around how they play the cards is going to be important, and I think that's an element that we want to see. There are also elements that needs immediately to be tackled, like inequality, lack of infrastructure, and certain elements. But as Julian says, if the money is coming in, probably we want to see some improvements in these areas. One element that we didn't mention today in the podcast, but I think it's going to be really important because it's part of this competition of between great powers, but also part of the problem with organized crime in Latin America, which is huge. It's a huge problem going around that. And I think Latin American governments, in one way or another, are trying to tackle this, and I'm trying to coordinate among them as well. Maybe we're going to see more collaboration toward this. But also, I think this competition between great powers is going to affect there. It's not casual that the U.S. has put some much more pressure in terms of the fight against organized crime, because it's affecting also Chinese interests in certain elements. Money laundering are very related with the Chinese mafias, the fentanyl production. So it's going around that. This is part of this competition. So, well, when you see all these big power competitions, you begin to understand some of the movements that are going in the region. But doing a prognostic of this year, I would say it's a cautious optimism that there are a lot of opportunities. There are risks, definitely, especially because Latin America is not an isolated region. Whatever happens around the world is going to have an impact.
But, Julian, sorry to interrupt you, Alberto. Julian, are you going to go out and buy Brazilian assets as a result of your view of the world?
Yeah, I would. If given the opportunity, I would go and of course, Brazil assets. If I could do Bolivia as well, anywhere. I think there's some real opportunities. So anywhere where it's terms of anywhere where it's cheap, I mean, there's a potential rebound next year, which I think there is, and there are. But I think there's certain opportunities that can be taken.
And we'll be coming back in future podcasts to all these opportunities, what these new conservative wave governments do, and what the strategic outlook for Latin America is. So thank you very much, Alberto, Julian, and we will talk again shortly. Bye for now.
Thank you. Bye.